There is an old Chinese proverb that is very famous when it comes to investing. And it says, the best time to plant a tree was 20 years ago, and the second best time is today. The truth is that this is not completely accurate, because if you plant your seed during winter when the ground is frozen, it doesn't matter your good intentions. You won't see any results, my friend. So it's just not about starting early, but also starting when the conditions are right. And this is especially true when it comes to investing. Before you consider investing, there are a few things that I recommend you go through, and most of them are related with having clarity on three main things. The first is clarity on your goals. What is that you want to achieve, and what level of involvement you're looking for with your investments? The second is clarity on your risk profile. How much risk can you tolerate? This will help you to set your risk-reward ratio, which is the correlation between the risk of the investment and the reward that may come from it. And the third is the clarity on the vehicle. Based on your goals and your risk profile, choose the right financial vehicle for you and understand what you can expect in terms of financial risks, length of the investment, and financial rewards. When it comes to investing, there is no one size fits all. So let me ask you this question. Why do you want to invest in the first place? Let me tell you why most people invest and why you may want to think about it differently based on your goals and your current financial situation. Most people start investing because they want to achieve financial freedom, having their money work harder for them rather than trade their time for money. Some of them want to retire earlier. Some of them want to leave something to their children, a legacy. Some of them just want to have a better return than what they get from the bank. I mean, maybe this is you, or maybe not. Maybe you're just trying to get an extra holiday per year with your family, or maybe just some extra cash at the end of the month to enjoy a few nights out with friends, or maybe you just want to protect your money. The goal of your investment matters, and it should be clear to you since the beginning. Also, your current financial situation has a big impact on the type of investments that you may want to consider. So let me share with you a roadmap to understand where to start with investing based on your current financial situation and your goals. This is from the book Rich Dad Guide to Investing, and if you want to have a look at the book, I will leave the link in the description below. Okay? I will share with you the 3 steps, and then I will explain each of them in details. So the first step to achieve financial freedom is to be financially secure. The second is becoming financially comfortable. And the last one, of course, is becoming financially rich. So why do we invest? We invest mainly for 3 reasons: to be secure, to be comfortable, and to be rich. Something that you want to keep in mind is that bigger is the financial goal that you are trying to achieve, and bigger is going to be the pressure on you, because it will require more capital or more effort. And obviously, your goal is based on your current situation. So if you don't have any savings and want to start investing, your first goal is to create a solid financial foundation by building your financial security. So what does it mean? It means that you want to have at least 3 to 6 months of cash reserve in case of an emergency, and this is based on your risk profile and the market conditions. Also, I would suggest you have some sort of life insurance just for peace of mind before even considering investing. Example, on your mortgage, if you have one, and etc. etc. Now, every financial investment bears risks, and usually, but this is not always the case, higher is the risk and higher is the return. So when you start investing, especially if you have a small capital to protect, you want to start with an investment that has a smaller return but is more secure. And usually those are fixed return. So let me share a short list if you are just starting out and you have a little or no money in your savings account. Always keep in mind that I'm not a financial advisor and these are not financial advice. This is just my personal opinion of what I would do. So let's say we want to build our financial security. Where to start? First, build up your cash reserve, 3 to 6 months. Second, start looking for insurance, okay, for peace of mind. Third, start looking for a fixed income investment. And if you're in the UK, you may want to consider an ISA account. Now, the next step is to become financially comfortable. And so the type of investment that you may want to consider are slightly different. You may want to take more risks for better rewards and buy and hold assets like property or stocks. What I always suggest is to invest in what you understand, and usually property is something that most people are comfortable with. Buy and hold assets, this should be your next strategy. Now, which asset is best for you? Again, it will depend on your knowledge, your risk profile, and your goals. The last step is to become financially free. This is when your passive income covers all your living expenses, your ideal lifestyle, and money is no longer a problem if you want to experience life fully. Now, when I speak with potential investors that want to become financially free, I usually ask them a simple question: what's your number? And you will be surprised, but most of them have no idea what I'm talking about. And this is the first things that you want to have clear, okay? You need actual numbers, because if the only things that you have is an idea of freedom, it will be very difficult for you to succeed in achieving your goals, especially financially. On the other hand, if you have specific numbers in your mind, you can start creating a plan to achieve your goals. You can monitor your results and make adjustments to make sure that you hit your target. So the next question that you may have is, how do I figure out my financial freedom numbers? And this is easier than you think. So let's start with the first step to achieve financial freedom, which is financial security, okay? How to do that? You list down all your fixed expenses, then multiply it by 3 or 6 based on your risk level. And some people are comfortable with 3 months of cash reserve, some people 6, whatever feels all right to you. This is your first goal. Then the second step is, once you achieve this target, get your insurance in place to have peace of mind. It's crazy that some people never take the time to really look into insurances, and it's a big mistake. It's probably cheaper than you think, and once you have, you will sleep much better. I will leave the link in the description below of the website that I use to compare different prices. Next step is start investing in your ISA or IRA, depending if you are in the UK or the US. Then let's move to the next stage, getting financially comfortable. So you already have your cash reserve, your insurance in place, you're already saving into your ISA or IRA, and now it's time to make your money work for you. Use your money to invest into a financial vehicle that could potentially bring you to the next level by generating passive income. It could be investing in property, it could be stocks, whatever you understand and whatever you feel comfortable with. What should be your target for becoming financially comfortable? You have 2 options. So some people suggest to list down all your fixed expenses like mortgages, if you have 1 or more, your bills, your insurance, and so on, right? So you get that number that you must cover with your passive income to become financially comfortable. Because at that time, you basically don't need to work to cover your fixed expenses. It's also true that if you can cut down some of your fixed costs, you make it easier for you to achieve your target. So if your current lifestyle is $3,000 per month, but you could reduce it to $2,500 without really drastically change your lifestyle, then you need $500 less per month to become financially free, which is, in the great scheme of things, is massive, because now you can use this $500 per month to speed up your financial journey. Now, the great news is that later on, you could go back to your $3,000 per month lifestyle, but this time by using your passive income. Personally, I think this way to calculate this number is too simple because it doesn't take into consideration factors like taxes and lifestyle, but just the bare minimum for stop working without going broke. And I don't know about you, but it doesn't really excite me, the idea of investing just for not going broke. Plus, when you commit with investing, you are playing a long-term game. So your vision and the reason why you are doing it, it's very important. And that's why I like to have something more exciting to look for. And I use a slightly different variation. I like to start by listing down all my fixed expenses, as we saw in the previous example, but then I add an extra 30% on top of it. That will give me that extra little money to enjoy my freedom. And this will be my target to be financially comfortable. So, example, if your living expenses are $2,500 per month and you add an extra 30%, it comes to 3,250. This would be my target in this example. Obviously, this is just the beginning. It's an important achievement in your financial freedom journey, but not the end goal. The way I get my financial freedom number is by listing down all my living expenses plus 2 times the cost of my ideal lifestyle. And I learned this formula from Tony Robbins. So by using the same numbers as the previous example, we have 2,500 monthly expenses. Assuming my ideal lifestyle is 5,000 per month, then I multiply it by 2 and it's equal to 10,000. So the total is 2,500 plus 10,000 and my target is 12,500 per month. Now let's multiply this number for 12 months and we get 150k per year. Now, how do you know how much capital you need to generate this passive income? Because this is also important. Usually I use a 5% interest rate as a benchmark, which is very, very doable no matter the economy. So in this example, I divide 150,000 by 0.05 and my working capital target for this example is 3 million. Okay, so if I have a working capital of 3 million and I get from this working capital just 5% interest rate per year, I basically get my 150k passive income. So now I know what is my financial freedom number per month and my capital target. The reason why I want to know both of them is because you could be in a position where you achieve one of them but not the other. And usually you may achieve your monthly income first and your capital target later. So let's say you have a business now that generates passive income and it's covering your monthly expenses. And because you feel super comfortable, you stop investing or savings. Let's say that in a few years from now, your business starts to suffer and your financial situation change again. If you didn't put money aside to achieve your capital target, now you may find yourself with a big problem because your passive income is not enough to cover your lifestyle. So I hope this clarifies why both numbers are very, very important. So when is the right time to invest? Let me answer this question by quoting Warren Buffett. The reason why someone is sitting in a shade is because a long time ago, someone else plants a tree. The time is now, my friend, but make sure that you plant your seed during the right season. Thank you so much for watching. If you haven't yet subscribed, smash the bell so you get the notification when I release a new video, and I will see you next week.